Hello everyone, welcome back to the channel. This is part 2 of the in-depth analysis videos that I'm doing on Baidu. So if you haven't checked out the first one, please go ahead and see that first before moving on to this one. If not, let's set it up. Alright, so in this video, the first thing we'll be covering is the competitive analysis and finding out where Baidu's strengths and weaknesses are. Also, I'll be doing it on a business segment level instead of an entire company. So for each business segment, we'll be looking at the various biggest competitors that Baidu have and seeing where Baidu lies in that particular business. So the first thing is online advertising, and here definitely Alibaba is the dominant player with 29% market share. Then we have ByteDance, which is basically TikTok with 18%, and then the third player is Baidu. Obviously, there was a time where Baidu was the leading player in this area, but things have changed, and as e-commerce have picked up, Alibaba has taken the lead, and I don't see this position changing. Alibaba will maintain its dominant place in the online marketing business. Moreover, there's TikTok, which has actually blown up so much in the recent years, and advertisers who wants to target millennials are actually putting their ads on TikTok, and that too I think is a big moat for TikTok at this point of time, at least in China itself. So they are expected to maintain its dominance. I don't think there will be much growth for Baidu in this area, but it will remain as a cash cow, and they can use this business to just get the cash and deploy it in another growth area where they can have their future businesses in. Moving on to iQIYI, which is the video streaming platform, and we have this data from 2020, and we can see that iQIYI is actually leading in terms of monthly active users, and the second place is Tencent Video. Youku is just half of these players, so we can just ignore them for this time being, and they don't even report their subscriber count, so it's not important. Comparing the subscribers of these two, iQIYI is definitely behind Tencent Video, and actually the subscriber count for iQIYI has been dropping. It was at 106 prior to this data, and the latest one in Q1 2021, iQIYI's subscribers have actually further dropped to 101 million users, whereas Tencent Video's subscribers have increased to 124 million. So there is something happening over here, but obviously, if you do your search, it is actually attributed to the price hike that iQIYI did last year, whereas Tencent Video just recently in April did increase their prices as well. So we'll see the effect of that at the when the Q2 earnings results come out. So yeah, we'll figure out, is it just because of the price hike that subscribers were leaving iQIYI, or there was something else, something more than that. Maybe the variety of shows offered at iQIYI isn't that good as Tencent. So yeah, we'll figure it out when the Q2 earnings comes out. However, it is then the question is, why are they hiking the price? Why are they increasing the price at the expense of losing the subscribers? Well, this is because the growth in the subscriber count has slowed down significantly once these players have hit the 100 subscriber mark. So they have to milk the cow, right? They have been losing money. They are not profitable as of now, so they have to increase the prices in order to become profitable. There's no more growth left anymore, right? So yeah, the next business segment we have is the cloud business, and over here again, Alibaba is the dominant player with 40.3% market share. But it's not surprising; they have been the first player to enter this business, and they have been pouring money like crazy into this business segment. The second one is a bit surprising, Huawei Cloud, which is at 17.4%. They were the last player to enter this business, and they have definitely scooped up a lot of market share within that time. The third one is Tencent Cloud with 14.9% market share. This is mainly because of their dominance in the gaming side. And the third one is Baidu AI Cloud with 8.4%. This is quite small, but one thing you should notice here is like the word AI. None of the other cloud has AI attached to their name, but what AI stands for is basically artificial intelligence. And the thing to take note of here is that there are multiple levels of cloud offerings. So the basic one is the storage, right? You have cloud storage. This is what we use on a daily basis, like your Google Drive or things like that. So yeah, But if you dig deeper, that's where AI comes in, and it's supporting the cloud and providing machine learning and cloud computing. So that's where Baidu actually outshines. And if we see the chart for this, right, particularly for AI cloud market in China, Baidu is actually leading in this area, but it's quite, I mean, Alibaba is quite close to it as well. So yeah, it gets more clear when we see the technological abilities of the various cloud players as well. We see that Baidu and Alibaba are neck to neck, and then the other players are a bit far away, including Huawei as well. So yeah, this is the area where Baidu has the most potential because of their technological capabilities and their expertise. They have been in the AI business for longer than any other player over here. I'm surprised about Alibaba's dominance. Like, I didn't know they were so advanced in the AI side, but that's where they are. Anyways, the AI cloud itself is actually growing faster than the basic cloud at 43% expected CAGR for the next 5 years, as compared to the 37.2% CAGR for the normal cloud. So yeah, in this area, Baidu really has the ability to grow, and this could be one of the biggest business for Baidu going forward. Right now, they are not even charging most of the developers for the, like I mentioned in the first part, they are not charging for their AI services on the cloud at the moment. So going forward, as it develops further, this could really grow for them. So yeah, as long as they maintain their AI capabilities, right? But they are actually focusing a lot. They're spending a lot. They recently raised to invest in their own AI chip known as Kunlun 2. So Kunlun 2 will be going into mass production in the second half of this year. So yeah, that could give a further advantage to Baidu. Moving on to the smart devices business segment. In this segment, Baidu is competing with Alibaba and Xiaomi locally, and Amazon, Google, and Apple internationally. So if you see this chart over here, which is of the number of shipments of smart speaker and smart displays per vendor, we can see that Amazon is leading, and Baidu is in the third place, followed by Alibaba and Xiaomi. So this also means that locally within China, Baidu is the market leader. And that could be contributed to the fact that Baidu itself has the best natural language processing tech. I mean, they are the most advanced in that. And having this capabilities, right? Obviously, like, if you know what is Google Home like, so you communicate to Google Home, right, verbally. So that is what the technology is. And as you have more devices out there gathering data for you, you are actually able to improve this technology further. So if Baidu is able to maintain its lead in the amount of speakers sold, then obviously they're going to maintain their lead in the natural language processing as well. So yeah, at the same time, I was actually checking if this data is any useful. So like, what if like Baidu speakers are priced way lower than as compared to Xiaomi and Alibaba? Obviously they're going to sell more, right? But then again, I see that Baidu, Alibaba, and Xiaomi, their speakers are comparatively priced, like they are all around 500 yuan mark, whereas obviously Amazon, Google, and Apple's product are a bit more premium. But within the Chinese market, doesn't matter. Within the local players, Baidu is winning, and I think they are able to maintain their lead if they are able to maintain their AI lead in natural language processing as well. So yeah, this is good to see again, one of the growth areas for Baidu. And actually they can add on more hardware products to their line of smart devices as well, so which would be great. And at the same time, Baidu is also, like I mentioned earlier, they are also providing smart screens for vehicles itself. So that is another area for growth for Baidu, where Amazon and Xiaomi are not competing. For the last segment, we have the more exciting one for all of us, the autonomous driving or the intelligent driving business segment. In this business, Baidu is competing with quite a number of players internationally and locally. So we have locally, we have Pony.ai, we have Deep Route, we have AutoX from Alibaba, we have Didi backed by Tencent, and all these companies are already running their vehicle at level 4 autonomous driving in different cities of China, except Didi. Didi is still in the development phase. And if you're not sure about level 4, level 4 is the level of autonomous driving where the vehicle is capable of full self-driving, but you still have a driver at the driver's seat just for safety purposes, like if something goes wrong. However, the vehicle is capable of level 5 driving, just that at level 5 you have to have the regulatory approval and all those things for the driver to not be there. All right, and from what I can find from all the data, Baidu is actually a leader, not just in China, but in the world as well, if I may say that. But definitely that's up for debate. But seeing at the information, right, as I mentioned, Baidu has most licenses in China at 199 licenses, as compared to the second player, which is only at like 20 licenses. And in terms of test mileages as well, Baidu has the most. And looking at this table, right, this is the more exciting one. So yeah, in this table, you are comparing all the international players, and Baidu is actually a leader in terms of miles per disengagement. They have 18,000 miles without any disengagement, which is just amazing, right? And it's more amazing on how fast they have achieved this. So like Baidu, within like 3 years, they went from 41.6 miles to 18,000 miles. That is great, and that's the faster growth as compared to Waymo, which is backed by Google. So this is just crazy how fast Baidu has grown. And for the people who are doubting this table and the information here, well, just take note that this is from their run in California, so where all the other players are running their vehicles as well. So there's no, it's quite comparable. Obviously, the route might be different. I'm not sure about what route they're taking, but it's still very comparable, and it's on an international level. And Baidu is winning, which is just amazing. So yeah. Also, Baidu was the first company to receive a T4 autonomous driving license, which is a license that permits Baidu to run their vehicle on autonomous mode in complex urban areas like city centers, the crowded city centers, and within complex structures like tunnels and all. So combine this with all the other things that I mentioned in part 1, where they became the first company to commercialize robotaxis and all those things. You'll understand why I say that Baidu is actually a leader in this area. Even if you compare to other companies like Waymo and all those things, right? So yeah, Baidu is really leading there with Apollo. Right, so that's all for the competitive analysis. Now let's move on to my investment thesis on why I am investing in Baidu. Oh, so yeah, if I didn't mention, I have already started a position in Baidu. I hold about 200 shares, and my average price is 186 Hong Kong dollars, and I will be increasing my position in that. The two investment theses that I have are the huge tailwind from the government's policy push, and secondly, the competitive advantages of Baidu in the new business segments that they are developing. So obviously, everybody knows that China is pushing aggressively towards technology to bring its economy to the next level and to go global with its economy. So yeah, it's very hard for the Chinese players to actually dominate and go global with their traditional products in terms of like consumer brands and stuff. It's like, they can't compete with Apple, Google, and all these players, right, which have already built a brand. But if they focus on new technology and disrupt this area, that's where they can go global in. So that's why Chinese government is pushing aggressively for clean energy and artificial intelligence and all this autonomous driving and all these technologies, right? And Baidu is the key player over here. They are very well positioned to take advantage of all those things. So yeah, specifically for autonomous driving, right, Chinese government has an aim to have half of the cars manufactured in 2025 to have autonomous driving tech. And Baidu is the only player, not the only player, but I think the biggest player or the leading player that is providing its autonomous technology as a software service to various traditional automotive manufacturers. So yeah, that is one amazing thing that they can explore a lot. All the other players, like maybe if you take Tesla, Waymo, or any other player within China as well, they are only developing the software for themselves, whereas Baidu is actually selling it to the other players as well. It is a two-sided sword. Like, they are increasing the competition if they wanted, like they are entering EV market as well, but at the same time they can generate a lot of revenue. And once their EV comes out, they would have all the data out there to actually be the best at that point of time as well. Further, robotaxis have a potential to solve a lot of problems that big cities in China are facing, like congestion and stuff. So yeah, and in terms of AI, China wants to be a leading power by 2030. And one thing to know about China is that the government controls the flow of capital. So if they want to achieve something, they can flow the capital to that area without restrictions. So that's how they're supporting all these tech giants as well. And Baidu, being but the leading AI company in China, is getting a lot of support from the government. So yeah, that is a huge tailwind for Baidu at this point of time. Moving on to the second investment thesis, I've already extensively talked about Baidu's edge over its competitors in the various businesses they are venturing into. However, if you ask me, in my opinion, the two main businesses that have the most potential of the near-term growth for Baidu, it's the AI cloud and intelligent driving. And talking about the intelligent driving, right, I've saved the best part for now. Other than all the things that we have talked about, right, Baidu has also pioneered and of course is the market leader in the vehicle to everything solution, V2X. This is the infrastructure for next generation smart transportation system that helps cities to improve traffic condition, air pollution, and also road safety. One of the aspects of this is vehicle to infrastructure communication. For example, vehicles can wirelessly communicate to the traffic lights that they're approaching to know that if it's a red, amber, or green light. And they don't have to rely on the cameras. Cameras has a huge drawback that in adverse weather condition, they don't perform good. No matter how much you train them with AI, obviously when you can't even see, you can't tell if it's what color of light it is. And there are also problems where the view of the traffic light is blocked by something, maybe a truck in front of the car. So yeah, all those things this vehicle to infrastructure communication will make autonomous driving vehicles more reliable. Like they can operate at in any weather condition and stuff like that. So this will make it more robust, and which is required if you want to remove the driver from the driver's seat. You have to have vehicles that can operate in any condition. At the same time, when the vehicles are communicating with the infrastructure and the other vehicles around it, right, you can reduce the amount of sensors that are there in a vehicle, which obviously brings down the cost per vehicle, right? And that's a good thing. The only drawback with this kind of system is that it's harder to scale. So you have to have sensors installed in the city before you can roll out the cars, right? And that is the reason why Tesla is not doing that. Tesla is using just cameras, which is easier to scale. Like they can roll out their vehicles on existing infrastructure. But then again, this kind of system is a necessary long-term solutions that we need in order to make robotaxis a mainstay, and like you know, to remove a driver, like to have no safety driver at all. So yeah, in fact, last year when I was interning for a company and working on autonomous public buses, right, I was communicating extensively with the local Singapore authority for all these things, right, Land Transport Authority. So yeah, from them also I understand that Singapore is exploring this area as well, and they will be venturing out into this area. So yeah, this is where Baidu has an edge over every other company. And focusing just in China, right, in August last year, Baidu won a $71 million project to implement this V2X solution in Guangzhou. This was just the start, and as of December 2020, Baidu has won projects in over 1 dozen cities, including Beijing, Shanghai, and now obviously this V2X solution, right, is not just for the use of Baidu. It is open source, and all the other companies can also implement it in their cars. However, Baidu is the one developing it, and they know it inside out, and their vehicles can already communicate with these systems. So they definitely have a competitive edge in the short term, and obviously they can stay ahead of their competition going forward as well. In the end, Apollo is also a brand that I believe can go global and not just be limited to China. Obviously, China is a big market, but globally is bigger, right? So yeah, and it's gonna be buttery smooth for them to enter Southeast Asia. They are going to be encouraged to do so. However, it's going to be a bit more difficult to enter the Western countries, and that's mostly because of the geopolitical conditions, right? Nothing to do with the capabilities of the company. So yeah, overall, I believe that Baidu has focused a lot in research and development in the past few years. They have 56% of their employees in the R&D department, and they have been spending a lot of money. 18% of their revenue went towards R&D in the last year. So yeah, they have spent a lot of money, and now at this stage, they're at the verge of commercializing all the technology that they have developed. So it's a very good time for us as an investor to invest. We don't have to look at the downside of all the investments that they did, and we can enter at a time when they are started to milk the cow. So yeah, it's a good time to buy. However, it's only a good buy if you can buy it at a fair price. And to calculate the fair price, you have to go into the valuation. But before we do that, I wanted to show you the stock price, historic stock price of Baidu. It's quite interesting. So like, as you can see, it saw a huge run up earlier this year, and then it crashed quite a bit. So the story behind it is that at first in November, December, somewhere there, Cathy was started to buy this company, and it hyped up the company basically, and it saw a huge run up of about 200% at a time. And then there was a huge crash. The crash was because of the Archegos Sega. So the banks had to liquidate their position. There's a huge liquidation, and the price fell 44%. And since then, it's just trading around that area. So now it seems like it's a good time to buy. If you bought the stock price, if you're looking at it at when it was like going up at 300 or so, and it has dropped now. So if you're thinking about buying, then obviously it's a good time to buy now as well. But yet again, for me, I need to do a DCF on this to find the fair price, and I've already done that. Alright, so here's my DCF model for Baidu. As usual, I have made a lot of assumptions on this model, which I will be going through in a minute. However, I will also link down this Google spreadsheet in the description below. You guys can make a copy of it and adjust the number according to whatever you find is reasonable. So for the revenue itself, I'm taking a growth rate of 22% in the year 2021. This is because Baidu did 25% growth in Q1. In Q2, they are projecting the same growth of 25%. I'm taking a bit less than that just to be conservative. Then I've decreased it further down in the next 2 years. And year 2024, I'm taking it as at 20% because that's where Baidu's EV company, Jidu, is projected to start selling their vehicles. And in 2025, I've decreased it again. In this time, I'm not taking net profits, but operating profits, because I find that it's easier for me to project the free cash flow using the operating profit. The net income is quite here and there. So yeah, in terms of the margins, I'm taking it at 15% for 2021, which is quite somewhere as compared to the pre-pandemic level and the 2020 numbers. And in the year 22, going forward, I've increased it a little and increase it in 2024. This is because their new business segments will start generating more and more money and less losses. So their margins should improve from there. All these numbers over here are taken up from their earnings report from 2020. And the risk-free rate is China's 10-year bond yield. This helps us to calculate the WACC, which is 9.3%, and that's what we'll be using to discount our free cash flow. And this is our expected returns from Baidu. Over here, we can see the free cash flow rate is quite good at over 100%. This is not the exact number, not the exact free cash flow numbers. I'm just taking a simpler one for our projection. However, going forward for the free cash flow rate, I'm taking 80% because I don't think the non-operating income can grow at the same pace as their revenue. So it's conservative to take 80%, which leaves us enough room for taxes and stuff. So yeah, and the perpetual growth rate is at 4% for me. This gives us the fair value of 251 Hong Kong dollars, and that is a margin of safety of 20% since the current price is 199 Hong Kong dollars. Yeah, and if you want to know the ADS price, the fair value is at 258 US dollar. So in this DCF ride, in my opinion, I have been very, very conservative, and even then I'm seeing a margin of safety of 20%. So in my opinion, it is a good time to buy Baidu, and their future prospects are very, very good. However, there's one risk, in my opinion, right? In the past, they were a market leader in search engine and in online marketing. However, they lost their lead to other companies. So there is a potential that, there's a risk that Baidu's management is not able to execute well enough in all these areas that they're projecting in the future. So that's one risk I see happening. But obviously, with the valuation they are trading at, I think it's a good price to enter, and the risk is quite low. So as I mentioned, I've already invested into Baidu. I hold 200 shares of Baidu at this point of time, and if it drops below 190 HKD, I'll be investing more. And if I have a lot of cash, I will be investing at this price as well. But I'm trying to save some of the cash as dry powder. So yeah, that's about it for Baidu. And until the next video, ciao.